Hey everyone, and welcome back to another video for today. In today's video, we're going to talk about an extremely beaten down name, one that, you could maybe put now in the AI story name, more specifically, agentic AI. Now, at the time of making this video, this is the current state of the market. It's a bit balanced, I would say. Yes, Nvidia is down 3.4%, Broadcom 2.5%, but most of the stocks that we do follow are still doing quite okay. At the end of the video, we're going to look at our watch list and talk about some specific names. But today we've also had some comments from Jerome Powell, so I do want to touch a little bit on that. Now, the company that we're going to cover in this video is none other than, yes, UiPath. Now, UiPath, you've been asking me a little bit more about that over the last couple of weeks, especially after, well, the stock did rise more recently on a couple of announcements. We're going to talk about that as well. It's still a very small company, all things considered, $7.8 billion. I still think that it could be an acquisition target, or it's a company that will do very well in the future if it can prove that AI is a huge tailwind for them. Because as I will show you, growth right now is not great for this company. It's actually in the single digits, but maybe that might change. So we're going to cover that in this video, but let's maybe first start with some comments from Jerome Powell. So, the Fed will not try to pinpoint break-even rate of employment. The standard error itself is perhaps 50,000. Fed may end balance sheet runoff in the coming months. Labor market perception remains on downward trajectory, and the outlook hasn't changed much since September Fed meeting. What I'm getting from this is, well, QT is nearing its end, and we might be entering quantitative easing, QE. He continued by saying, data in hand suggests current economy is where it was in September. Data before the US government shutdown suggested growth may be better than expected. We are still expected to have the meeting 2 weeks from today, or I believe 2 weeks or 15 days from today. The probability still sits at 96% chance that we are going to get another 25 basis point cut. We've also had a little bit of a comment here from the US Trade Representative Grieve with regards to this whole China trade circus show that's going on right now. So 100% China tariff depends on what the Chinese do. Chinese realize they overstepped. Again, the Chinese probably don't realize they overstepped or don't think that they have overstepped, but okay. Think they'll be able to work through it with China. Had a staff talking with China yesterday in Washington, and it's hard for China to find an off-ramp on rare earth. By the way, as we've discussed during the live stream, rare earth aren't that rare. What is, let's say, rare for now is, well, who is the one that does the processing? And the large part does happen in China, or Chinese companies do control that for now. And so with that out of the way, let's jump right into UiPath. If you enjoy this type of videos, hit all the buttons. We'd really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also a special thanks to Fiscal.ai, previously FinChat, for sponsoring this video. If you use my link, you'll get 15% off. It's in the pinned comment and in the description. Everything you will see in this video, chart-wise, gross margin, operating margin, everything, transcript is all available on Fiscal.ai. And of course, a huge thank you to everyone that has been using my link. Really appreciate that. So, UiPath, as you can see, over the last 5 years, stock is down 80% from its peak. Over the last 3 years, that's 38%. Over the past 12 months now, it's basically flat. Year to date, the stock is now up 28.5%, and the big move, of course, happened more recently. We're going to talk about that. Now, this is a company, like I said, $7.8 billion, trading PE extremely high, but if you look at the forward one, sits at 21.2 times. You might say, oh, that's not expensive. Well, it's not expensive, it's not cheap either for a company that is expected to grow revenue forward 2 years, CAGR only 9.3%. EPS is expected to grow faster than that, 17.7%. Now, previously, you would have put UiPath in the RPA market, the robotic process automation market, which is expected to grow quite rapidly over the next couple of years, right? We go from $5 billion in market size to $30.8 billion in 2030. If we look here at Gartner, where does UiPath fit in? Well, the UiPath was named a leader in Gartner Magic Quadrant for AI augmented software testing tool. It is right here, the leaders quadrant. Now I'm saying right now we are putting them in a different category. Why is that? Well, more recently, we've had plenty of announcements, right? We've covered that during the live stream as well. If you don't know, we do stream almost every day before the market opens, and a lot of press releases got released back in September, at the end of September. They basically used every single big name that they had to use, right? They used Gemini, NVIDIA, Snowflake, OpenAI. Everyone was in those press releases. So in this case, we've had one, UiPath integrates Microsoft Azure AI Foundry capabilities to agentic platform. We then had this, UiPath announces partnership with Snowflake to unite agentic automation and Snowflake Cortex AI. UiPath simplifies agentic automation with voice agents with Google's Gemini models. And so to summarize all of it, UiPath is basically transitioning from just automating rule-based tasks, RPA, to an agentic automation and orchestration platform. This means their AI agents can handle more complex end-to-end processes. Or processes. Which one is it? The number one I just said or number two? Let me know in the comment section below. They will decide the next best action and coordinate the work of traditional bots, people, and different AI models. They've introduced new products like UiPath Maestro for end-to-end orchestration and new purpose-built solutions for specific industries like finance and healthcare. As we've just seen, a series of strategic alliances with major tech players were announced to integrate advanced AI capabilities directly into the UiPath platform. So OpenAI, NVIDIA, Google Gemini, and Snowflake. These partnerships enable things like using OpenAI's ChatGPT for conversational agents and connecting it to business workflows, integrating with NVIDIA's Nemotron models for secure on-premise agentic AI in regulated industries like fraud detection. Now, the introduction of UiPath Autopilot experiences across the entire platform, which uses GenAI to make everyone more productive, from developers generating code and workflows with natural language to end users and AI assistant to tackle daily tasks. They also announced the AI Trust Layer, a management framework to ensure data security and responsible use of LLM. So you're seeing here a very, very, of course, strategic pivot from UiPath. The question, of course, is it going to work, right? So, of course, this is expanding their total addressable market, right? They're no longer selling just bots. They're now selling the brain that orchestrates all AI and automation within an enterprise. And their UiPath agentic automation world basically looks like this. So at first you've had, of course, this layer right here, activities, and workflows, and processes, and the top here you see agents, people, robots. This is basically what UiPath is offering right now. Agentic automation. 2025 was supposed to be, or is maybe still supposed to be, the year of agents. Right now, it doesn't really feel like it is. Yes, we've had some announcements here and there, but we are yet to see a lot of use cases, or actually a lot of companies that come out and say, oh, look, we've been using these agents quite a lot over the last couple of months, and these are the results. You've seen some, but really not that much. Last quarter, these are the results for the company. So revenue grew 14% year over year. ARR growth rate was 11%, and they've had a non-GAAP operating margin of 17%. Now, for a company like this, you would have thought that it would have been growing much faster. Yes, of course, previously when it peaked, it was growing at 80%, 46% growth year over year. But now we are at 9.3%, last 12 months 8.3%, still supposed to be 8.5% in fiscal 26, 8.2% fiscal 27, and 9.4% in fiscal 28. Now, of course, with all the announcements that have been made right now, with the strategic pivot, maybe that might change. And that's important. The maybe that might change could re-rate this company, could, yes, of course, push this company higher by quite a lot. Free cash flow over the next couple of years is expected to grow a bit faster than revenue. If you look at annualized renewal run rate, of course, the growth rates here have come down quite rapidly over the last 12 months. That only grew 3.4%. Looking at the dollar-based net retention rate, this is of course also something that you have to keep an eye on. It's now at 108%. It was much higher before, but it has been at 108% now for 2 quarters. Again, with all the new announcements that were made, the new product launches, could we see this increase? Anything above 100% is good, but of course, we would like it to go back up. So again, this is another metric that's very, very easy to follow on fiscal.ai. All the other metrics are easy to follow on that platform as well. And with UiPath specifically, this is one specific metric that you want to see go up, because that would indicate that, oh, okay, the existing customers are now spending more and more with the company. If we're looking at the margin profile of the company, of course, gross profit margin has stayed around 80-83% for quite a long time. Free cash flow margin has stayed around 20%, although it was a bit higher previously. Q1 2024, we've had 24% free cash flow margin and 84.7% gross profit margin. Since then, it did come down a little bit. Those are, of course, last 12 months a metric to get a better picture. Going forward, after this whole strategic repivoting of the company has, let's say, happened or matured, maybe we might see some better results. Operating margin, for example, also last 12 months has been improving consistently. We are now close to being break even here at a negative 2% operating margin. Last couple of things, RPO, remaining performance obligations, did increase 11.8% year over year. Now it's 2 consecutive quarters where RPO did increase above 11%, actually closer to 12% after we've seen this bottom here at 7.1% 3 quarters ago. And it's not like the year-over-year comparisons are that easy. Actually, they will become easier in the upcoming 2 quarters. Looking at customers with their ARR at 100,000 or above 100,000, that is also growing nicely faster than what we've seen other metrics grow actually. So that grew 12.4%. That has been growing double digits consistently. And the same can be said here for customers with their ARR at $1 million or above it. It has been consistent more recently at around 9.2, 9.7%. This is also something that you would like to see increase a little bit more over time. Now, last quarter, they told us the following thing. You can again go to view transcript, AI summary, goes over everything here. You can even ask it some questions. So a central insight is the profound synergy between automation and AI, with UiPath's automation and AI are stronger together philosophy driving significant commercial momentum. The newly launched agentic platform, including orchestration and agent builder, has seen rapid adoption with over 450 customers actively developing agents and nearly 1 million agent runs executed. Again, this is great. They report quite late in this earnings season. This was September 4th, so we're going to have to wait quite a long time until we hear more of the company, unless they do go to one of these analyst conferences over the next couple of weeks or months. But this, of course, could be seen in the upcoming earnings report. If we do see maybe some data about more adoption, if we do see retention rates go up, remains to be seen, but it's something that will be easily tracked. More recently, we've actually had the CEO go on CNBC and say the following thing.
Of agentic AI, we see a very solid demand. I can think that, since the early days of RPA, I have not seen such a huge interest from customers in a renewed automation initiative interest.
I'd say that these are some comforting comments by the CEO. If the demand is so high, I think you will see that in the numbers of next quarter, and maybe they will update or revise guidance on the way up again for fiscal 26. Now, the stock itself, as you can see, has gone up significantly. This is where the announcement has been made. Big jump, red candle did happen, so we did have a little retracement, but that since then, this thing has gone higher and higher here on the daily. So To conclude, before we go and look at the watch list here, to conclude, to me, UiPath has always been an interesting company, but it's a company that will get way more interesting once we actually see growth really re-accelerate. Right now, it is not growing that fast. For a company that's this small, it's not growing that fast. It's growing actually a bit slower than Salesforce, and Salesforce is, of course, much, much bigger and way more profitable. Of course, the difference here is in market caps as well, but that's where you would think that UiPath would be growing much faster. But that could change. That could change with this strategic pivot. So right now, it's on the watch list. I don't own it. I know a lot of you wanted me to cover this, so here it is. Now, lastly here, if we look at the watch list, Iron is having one heck of a day. I do believe that Cantor Fitzgerald came out with a $100 price target on the stock, so that's now higher, up 11% at $71. Still own my 500 shares of Iron. AST is up 9%, D-Local up 9.7%. We've also had a very positive note on D-Local. It's slowly but surely people are going to understand that this is still a diamond in the rough. Rocket Lab continues to go up, back closer to $70 here. Applied Materials 4.3%, AMD up 2.8%. Oracle is going to deploy around 50,000 AMD MI450s for the second half of 2026. We've had SoFi up 4%, Palantir up 2%, Oscar up 3%, Shift4 is actually green, PayPal is green right now as well, 1.1%. Who's Red Rubrik is down 4% for some strange reason. I am still extremely bullish on Rubrik as my probably only cybersecurity name out there. I like the others, but I went with Rubrik one, the size, the strength of the business, the category that they play in, and of course the speed at which they are growing. So overall, it's a good day. Yes, we have some pullbacks. For example, Nebius is down 2.7%, but who cares? Literally, who cares here? It's good to have some pullbacks, especially as we go and enter this new earnings season. A lot of the big banks have reported beats across the board, good comments on credit as well. So maybe that's why SoFi is also up 4.2%. I do believe that Pagaya is also up today a little bit. Yes, it's actually up 9.9%, so not a little bit. So overall, yes, October, as we've discussed, October is quite a volatile month. September was supposed to be the worst month. That didn't happen. October is supposed to be the most volatile month, and it is so far living up to its name. So all in all, that's about it for me in this video. If you enjoy this type of videos, hit all the buttons, check out fiscal.ai down in the description and in the pinned comment, and we'll see each other in the next one. Bye-bye.